Hello everyone, hope you are doing good. The stock we are going to discuss today is Tanla platforms. So quickly getting into their valuations, the general ratios which people look at: PE, it is around 15, price to book, it is around 3.2, EV to EBITDA is around 9.1. These are all quick ratios which seems very attractive. Also the company is debt free, so zero debt. Dividend yield is about 2.2%, also healthy enough. Another thing we look at is the PAT, the profit after tax, and also cash flow from operations. The cash flow from operations should be more than the PAT. So here if you see 642 odd crore is the cash flow from operations and around 506 crore is the PAT. So CFO is more than PAT, which is again healthy. The other thing which I look at is EBITDA. EBITDA here is around 692 crore and the cash flow from operations is 642. So the cash flow from operations should be at least 70% of EBITDA. Here it is around 93%. Again, this shows how efficiently the business is managed because of the low working capital requirement. Because here if you see, the company doesn't have any inventory assets. It's a service-based business. So they're having such a high cash flow from operation compared to EBITDA. The cash flow from operations also has been increasing since 2023 from around 246 crore to current 642 crores. Again a good growth. Free cash flow also has been increasing since 2023. Again a good sign. Also the current ratio is around 2.24 and the quick ratio is also same as current ratio, which is 2.24 because of the zero inventory the company maintains. The cash conversion cycle is as low as 76.13 days, which shows how quickly the company converts the revenue into cash. So 76.13 days is actually a 5 years average. So because of this zero inventory and a lesser cash conversion cycle, the company is successful in converting majority of its earnings recorded as profit after tax into real cash. So this is again a very good sign of converting recorded earnings into real cash. The company is obviously having a good cash holding, cash and cash equivalents of around 881 crores. Again a good position. But if you see, the FIS has been reducing its stake from 14.6% in September 2024 to around 7.3% in June 2025. But then the thing which you should look at is that from June 2025 to next quarter of September 2025, the FII has increased its stake from 7.3% to 9.1%. So this also has to be taken as a good sign. The promoter also had a buyback, wherein again it shows the confidence of the promoter in its company. So the promoter stake has been increased from 45.5% to 46.2%. Again a good sign. But yes, the company has been recently having a reduced net profit margin. The profit margin reduced from 16.7% to 11.45%. So we really need to look at this. Hence the company has been having immense margin pressure, moderate growth, and has been struggling with scale and immense competition, wherein the peers in the global market is having deep pockets. So the peers are ready to burn cash and take the market share. But then Tanla is also having its own strategies. The ROE, the return on equity, and ROA, return on assets, also has been recently decreasing. So this is all because of the margin pressure. Once the company is able to regain its profit margins, then these figures is bound to improve. So make sure you have this company in your watch list. This is not a stock recommendation, but then it is always good to analyze such companies, understand their financials, their balance sheets, their fundamentals, and also evaluate their businesses and try to understand if this can become a profitable company going forward. Already it is making good amount of profits, but then this margin pressure, this needs to be looked into, studied in depth, and we should understand how the company is going to mitigate this margin pressure. If this is found out, then this may be a way forward to understand the potential of a probable multi-bagger company. We'll come up with further updates on this stock going forward. See you in next video. Till then, happy investing.